These are the 10 largest insurance companies inside the United States. Number one is still and has, at least in my career, has always been the conglomerate, the largest one. It's State Farm. They have about 18.3% market share, which is about $104 billion worth of revenue. So when you see us post videos and talk about they lost $2 billion, imagine they lost $2 billion of $104 billion. They're massive. You don't see them lower their marketing. You don't see them lower these things because the impact that it has is very minimal, even when it is a large impact. They're starting to lose their grip a little bit and they're starting to slip down and they're having to raise the rates. So they are starting to have a little bit less of a value going forward. Their assets, they've got about $220 billion worth of assets, over 65,000 employees. They're big. The second one is Progressive, who is the one that's starting to creep up on them, and they own 15.2% of market share. So they are starting to become, and actually have passed State Farm a couple times, but it keeps bouncing back and forth. They have about $75 billion worth of revenue as of 2024. Their net income, they're about $8.46 billion, and they have about $105 billion worth of assets. The one reason I think Progressive is so competitive is one, they're competitive. Their prices are really good. They have independent agents. If you are looking for an independent agent that works with most of these carriers, I'll put that link in the description below. But in general, they have a ton of employees as well, 61,000 plus employees. But I think the thing Progressive is excelling and pushing them ahead of a company like State Farm is that their focus, or that at least their mission, is to always be ahead of the trend of technology. And it's not necessarily AI based. It just means that they're looking at what the consumer is focused on and they're trying to be ahead of that. Now, I'm not saying State Farm doesn't do that, but it has shown that Progressive has done a really good job of doing that. The third is also coming up pretty quickly, and I think they actually have a chance of passing both of these companies. It's Geico Insurance. They have 13.8% of market share. The biggest reason I say that is because Geico, let me give you the numbers first. $35 billion in revenue. They have 30,000 employees, so they're up there with everybody else. Out of Maryland, all of those nice things. What's notable is that it's Berkshire Hathaway. So Berkshire Hathaway, Warren Buffett, all those major people that know what they're doing, that's the biggest piece. Now, Warren is selling off some shares from what I understand, and he's essentially retiring, right? He's starting to back out. The piece that they're doing, Geico is doing, that's going to propel them forward is they've opened up their doors to work with independent agents. Remember how I just said, go to Progressive and fill out the link below, work with an independent agent? Well, now those independent agents are starting to work with Geico as well. The two largest in the nation, they're working with independents, and that one guy can work with multiple of them. That's a huge benefit that now allows them to sell insurance to more people without having to spend more on marketing. The fourth, who also has done the independent side, again, the one agent now is quoting the three top of the five, right? They're Allstate. Allstate is and has been a large company. They're starting to slack off a little bit as far as growth. Don't get me wrong, they want to grow, all those things, but they're about 10.5% market share. So we've got a major piece there, $39.8 billion in revenue, and they're out of Illinois. They really market a lot. You're in good hands, or whatever, the neighbor one, State Farm, but they are marketing pretty heavily. So you are seeing the Mayhem guy out there, and it's fun to see those commercials. But in general, they still have a really big market share. The fifth one was one I didn't expect. It's auto owners, and they've got about $10 billion. It doesn't even say the market share because now once we've lost out of that fourth spot, the market share is diminished down to very little. We're lucky if we see a percentage, let alone much. To be honest with you, if this was me at this point, I'd be like, okay, I got enough information. So I'm going to give you the key takeaways of the top five, and then we'll go into the next top five that will go into depth. State Farm remains the largest. That's just how, honestly, it's always been. Progressive has had significant growth. Geico continues to leverage what they've always done. They've always been the big marketer, and they're switching that to becoming more of just a wide range for people. Allstate has had a diverse range in general to where they work with various customers. They're, again, I don't think they're necessarily going to be able to keep up with this in the next couple of years unless they make some changes. Their rates have gone crazy. There's a lot of things happening. Auto owners has always been a strong regional, but they're regional. So they don't necessarily do all over the US, and they do work with independent agents, but they're a little bit more picky with the agents that they work with. So they're not really a wide range fit for most people. Number six is USAA. USAA is one of the best companies in most of the articles you're going to read. They've obviously been falling down because they're in sixth. They have about 6.3% in market share. They're essentially exclusive to military families. So if they're veterans, military, or a family member, that's one of the reasons they're not necessarily larger than they are, because not everyone can just join them. Number 7 is Liberty Mutual. They have about 4.2% market share, $13.3 billion worth of written revenue as of 2024, and they just have the above average customer satisfaction. They are going to grow larger. You're going to see them in the top 5, I would say, in the next 3 years, mainly because they also own a company called Safeco. Safeco has always been a really strong brand because Liberty didn't let independent agents sell them, kind of like we're talking about. Geico does. Allstate does, Progressive does. Well, Liberty is now allowing it to start to happen as well, but only because they're absorbing their other company that used to let agents or still lets agents work with them. So Safeco is being absorbed by Liberty Mutual, which means all of the Liberty Mutual policies and all of the Safeco policies are going to be combined. So these numbers, this 4.2% market share, is probably going to close to double in the next few years to where they're going to be in the top 5 as far as the market share to insurance. Number 8 is Farmers Insurance, and I'm actually surprised that they're in here. They're also $13.2 billion in direct written premium. They are what I call a sleeping bear. They have the technology, they have the money, they have the ability to go out there and do it, but they usually hibernate. They come out and they want all this business, and they do Dr. Burke, and they do all the commercials, and they sell insurance, and half the agents love them, half the agents hate them, and they're really competitive in some areas. Then they stop. They're just like, oh, we're done, we're good, we're gonna go back to sleep. At least that's my opinion. I've always seen them that way, even when I worked for them for 6 years. I thought that they have really good training. There's a lot of benefits to them, but because of the competitiveness and the fact that they just don't want business at a certain level, then you gotta be a little bit careful with a company like that. They're not necessarily gonna grow past to where we're talking about here to the top 10 insurance company. Number 9 is American Family. They are 2.2% market share, $6.8 billion in direct written premium, and they are really good with customer satisfaction. They've got low negative scores, if that makes sense. They're essentially a company that has worked with Costco. They had a huge presence there, and I think they're going to start falling out of the top 10 as these other companies start to take those slots. Number 10 is Nationwide, and Nationwide works with direct independent agents only, to where they'll only allow you to go to an agent, not direct to them as well. They actually used to do the opposite, which is what Progressive did, is they only sold directly, and now they really more focus on independent agents. Most of their customers are sitting there. They've switched it up in 2025 so that they're looking for more of that preferred type client. 2 cars, full coverage on those cars, owns a home or rents and wants rentals insurance or home insurance, and they're just a lower risk. They don't have a ton of claims, accidents. So they're starting to become more of like a Liberty Mutual / auto owners / State Farm company, to where they are trying to be a little bit larger and have lower risk. Now, the benefit is that's going to help them with profitability. The market share, maybe, if they start taking the business from a State Farm, then that's going to be beneficial because they are really, really competitive, especially on house insurance. They're comparable on auto, very competitive on home, and unless you mix the two together, the prices don't match up. So you're usually going to switch the whole bundle to a company like that. They own 2% market share, $5.4 billion in direct written premium. That is the top 10 insurance companies in the US, or the top largest insurance companies in the US. Let me know what your thoughts are. Is there one I missed? Do you think there was one that is larger than these? Let me know what your thoughts are. This is an article I found from CNBC and kind of mix it with some other Zebra and like the borrowers websites and all that stuff. So I mix it with some of the things that I knew in the industry. I think that Nationwide's going to move up. State Farm's going to move down a little bit. I think American Family will probably stay there for a little while. They're not necessarily doing anything bad that's going to cause any issues. And the rest of them are just going to fight it out at the top. I'm Mark with Think Insurance. I'll see you in the next one.